So where do you think the retail price is going to be? Where do you think it's going to be? Is it going to be closer to 5? Is it going to be nearer to 4? Because this is really important, and this is going to have a meaningful impact on the inflation data we're going to be seeing.
Yes, our forecast for retail gasoline prices has them going back about $5 into year-end. We think that's the level at which we need to see sustained prices to eventually solve the market deficit.
So if that's 5, what happens to the oil price? What's the equivalent?
So we think Brent goes to $130 per barrel at the end of this year to reflect, this need for sustained high prices. Again, I really want to emphasize, we're still in deficit. Despite growth slowing, prices still have work to do, and that's higher from here.
If China comes back, if China opens up, there's not any evidence of it yet, but at some point, theoretically, it is going to happen. China is going to start to reopen. Jet fuel demand is going to go up. Diesel demand is going to go up. Once you factor that back into the model, Damien, how does that change the equation as well?
Yeah, I mean, that's upside risk, right? If you look at our expectation, we've assumed that Chinese demand only modestly grows from here till the end of 23. That's effectively saying rolling lockdowns. That could shift and international travel could pick up. So that would be a net positive. If we're talking 500,000 barrels per day of Chinese demand going back to its prior highs, just on our pricing model, that's $15 upside per barrel to Brent prices. So I think that's an important one going forward.
Hey, Damien, we don't have a ton of time left, but backwardation just been crushed. What should we be looking at for the 1 to 6 month contract? What should it be right now?
Yeah, so keep in mind, right, and this is a big seasonal you have to keep in mind. Refiners are about to slow down, right? That's a seasonal turnaround, maintenance. What does that mean? That means diesel and gasoline prices are about to go up because usually you have an inventory buffer. This time you don't have it, so prices have to do the work. And that's rational that crude should be weaker and diesel, gasoline should be starting to outperform it.